Dean and Tyler Listle are registered investment advisor representatives. Investment advisory services offered through Brokers International Financial Services, LLC, member SIPC. Brokers International Financial Services, LLC, and Secure Retirement Solutions, LLC are not affiliated companies.
It's time for Secure Retirement Solutions with your hosts, Dean and Tyler Listle, fully licensed retirement specialists from Secure Retirement Solutions in Green Bay. Now, here are your hosts, Dean and Tyler.
Good morning, and thank you for joining us today. Tyler and I will discuss topics that affect your retirement, such as investments, income planning, Social Security, and much more. Good morning, Tyler. How are you?
Good morning, Dean. I'm doing great. How about yourself?
Good, thank you. Today we're going to talk about personal investments to make in 2020. It's early in the year, so we like to put this out there for people to try to stick to for the rest of the year. We're going to throw some personal investments out there, and these investments aren't always tied to retirement plans or the stock market. But the first one we're going to talk about does tie to the market, and that is try to stay the course with stocks during 2020. At this point, I mean, we're going to see volatility in 2020. It's an election year, and you typically see most volatility between about June and October when it comes to election years. And again, the reason to stay the course with stocks, you look at U.S. large cap stocks, and you're talking some of the largest stocks out there. They continue to have momentum right now, drawing some significant gains for people. So, equity-based investments, whether they be mutual funds or ETFs or individual stocks, have done very well. But, for some people, it's very hard to stay the course. Every day, Tyler and I talk to people who come in here and just, they think they should be pulling a significant amount of money out of the market because they think the market is going to crash. But when you ask them, what makes you think that? They say, well, we haven't had a correction in a long time, which isn't necessarily true. Understanding corrections, you've got to look at some of the volatility we've had. And as an example, in 2019, we had significant volatility in the market, but also the market was very favorable. So, I mean, you don't have a graph, you don't have a straight line that goes from the left lower corner to the right upper corner anymore. We bounce around quite a bit. But again, if you look annually how the market did, especially, U.S. large cap investments were very, very steady. So the thing that we're recommending going into 2020 is don't let emotion get into play here and completely pull your investments from the market, which we do see some people doing. However, we do believe in taking significant gains off the table. You had really nice gains in 2017, 18, 19. Because of that, there's nothing wrong with taking some of those gains off the table, moving it into cash to allow yourself to be able to buy should the market go down and stabilize. Then again, you can buy low. That's part of the risk-managed portfolios that we believe in. We always believe in carrying some cash in portfolios. If you're all in 100% with your portfolio and you are in pre-retirement or retirement age, we don't think that's always in your best interest because, again, many times you no longer have payroll coming in, so therefore the portfolio has to be able to be managed should we see that volatility in the market go down. That's typically done by having some cash taken from gains available for additional buying power. But as far as staying the course, again, things are changing. It doesn't mean that you're all in on tech or anything else at this particular time. We believe in diversification and balancing the portfolios, but we're starting to see that we're at the tail end of growth. The business cycle runs in ebbs and flows, and we tend to think we're at the tail end of that growth, and there's possibly recession out ahead of us. I don't want to say any particular time that we anticipate recession. I think that's foolish when people say at this particular time, date, and year you're going to see a recession. That's hard to do. I don't know where they come up with that information, but most times they're wrong. But Tyler, what else should we talk about when we're talking about, tweaking your portfolio but staying the course with stocks?
Yeah, Dean, now when we talk about staying the course with stocks in 2020, the first thing that I want to do is actually go back to 2019. And the S&P 500 was up about 29% for 2019. So right now we've been in a bull market that was going on 11 years from all the way back in 2009 to 2020 now. So with the market up 29% in 2019, obviously many people who were allocated heavily into stocks this last year, they made a great return. But still, a 1-year increase that large, especially this late in a bull market, again, we're on year 11 now, could be a sign that it's time to get a bit more cautious. And that doesn't necessarily mean reducing your stock holdings. Now, it could, depending on where you are. And again, everyone has a different situation. For those who are younger, definitely you don't want to increase your stock holdings just because we're in an election year and so much is going on politically. But for those people who are nearing retirement or in retirement, one thing that you might want to do is tweak your portfolio. And when we talk about tweaking your portfolio, we talk about shifting more defensively for a number of reasons. Right now, some defensive sectors that could perform well in 2020 if we have a recession or increased volatility would be utilities, consumer staples, healthcare, and real estate are some of those that could potentially be poised to have a good year in 2020. Stocks like Clorox, for example, is one that's come up that I've seen come up a lot, and part of that is because with the whole coronavirus that we have going on right now in early 2020 in China, there are many different companies that produce different types of disinfectant wipes, bleach, things like that are poised to do well early on here. The other thing that you might want to consider is stocks that have less China exposure. And for part of the reason we're still in a trade war with China, we have completed phase 1 of a trade deal, but there are still 2 more phases that we have to get completely finished before all tariffs are gone. So right now, the tariffs that the U.S. that we're putting on China, they seem to be hurting the Chinese economy more than the U.S. economy. So that's a reason to move and shift out of China stocks. And then in addition to that, with the whole coronavirus, there are many of major factories and industries that are completely shut down, and that's only going to hurt because there's no employees there. They're not working. They're not going to continue to bring in revenue and profits, so therefore it's going to hurt the company and hurt the stocks over there. So potentially shifting out of stocks that have a lot of China exposure. And then as we look forward to the rest of 2020, as everyone knows, it's an election year. And we expect to see some increased volatility, especially as we get toward the summer months into fall. But we are cautiously optimistic as we continue to head through the year, just because right now the U.S. economy still is doing well. But the main takeaway here is stay the course with stocks, but you might want to consider making some tweaks. Again, going and shifting into more defensive sectors such as utilities, consumer staples, healthcare, real estate. And we're going to touch on real estate in just a minute here. But that's the thing where you don't want to only stay with certain stocks for forever. Obviously, you want to continue making tweaks to your portfolio over time, and that's something that we recommend here as we head further into 2020.
Okay, one last thing, though, about staying the course with stocks before we go on to real estate. Tyler brought up healthcare, and remember, right now, healthcare is a unique opportunity here in 2020 because of geopolitical issues and political issues. The healthcare sector has been hit pretty hard, and there are some wonderful, wonderful healthcare stocks out there that are beaten up because of politics. You'll hear certain people talk about, Medicare for all. Others say Medicare for all will not work. But every time somebody talks about Medicare for all, you see some health insurance companies, their stocks go down tremendously. And, this isn't a recommendation. I'm not making a recommendation, but I bring up United Healthcare as an example. It's a wonderful company. Their numbers look spectacular. Unfortunately, every time you hear somebody talk about Medicare for all, it tends to go down. Those are sometimes a good buying opportunity. Same thing with pharmaceuticals. Right now, both sides of the aisle are working on a way to bring down the cost on drug pricing and pharmaceuticals. So many times a lot of these pharma companies and stocks tend to take a hit and go down. But if you look and research them in their pipeline, they've got some wonderful, wonderful opportunities to help people with everything from cancer to HIV to certain things like that, coronavirus and so on. So we watch, the healthcare and the pharma in 2020 might be a great opportunity. Okay, Tyler brought up the next thing, and that's real estate. real estate's a great addition to a complete portfolio. So for everybody that thinks that they should use the word all and everything to be all invested in the stock market, or everything should be in CDs, that is not a good situation. We believe in diversification, and real estate comes into play. However, if you're not experienced with real estate and you go out there and buy a 2-unit duplex and have a mortgage on there and things don't work out, I mean, that could be very bad for your financial situation, okay? So in situations like this, we say, why don't you try the real estate market by investing in real estate investment trusts, or REIT, as they are referred to, REIT. A real estate investment trust, there are really two types, and that's liquid and illiquid. And what that means is liquid means you can sell it off at any time. So if interest rates are hurting that real estate investment trust that you're invested in, you can sell it off. If you get into an illiquid real estate investment trust or a REIT, that means you can only sell when the owner of the company or the managers of that REIT say you can. So if it has gone down 10, 20, 30, 40, 50, 90%, whatever it may be, you can't get out, okay? So we always recommend liquid. And on the flip side, there's also even an easier way to try it, and that is you can buy wonderful mutual funds, many times no-load mutual funds, or ETFs that deal with real estate investment trusts. So we like U.S.-backed REITs at this particular time. Do understand, though, that they are interest rate sensitive, though they are sort of defying that right now in the year 2020. They're going quite well, even though interest rates are low. But that's a basic on real estate investment trusts. Tyler's going to talk a little bit about where some of the sectors they invest in.
Mm-hmm. Yep, good points there, Dean. Now, again, when we talk about investments for 2020, real estate is another one that we look at, and it's proven to be one of the best investments all time with returns comparable to the S&P 500 over the long term. But many people, when it comes to owning real estate or owning rentals, not too many people want to do that because it's as much of an occupation as it is an investment, where you have to keep up with tenants and you have to get your hands dirty fixing things or else hire someone else. So many people, they don't want to have an actual rental. So in that case, what they'll have is, as you mentioned, Dean, a real estate investment trust or a REIT. And really what a REIT is, it's like a mutual fund that holds individual properties. So a mutual fund, it holds a bunch of individual stocks all in one, so that way you're diversified and you don't have to go and only pick out a couple individual stocks on your own. A REIT works the same way, where it holds individual properties all into like a basket, all into one, and they typically will specialize in certain sectors like office buildings, retail space, or warehouse and storage facilities, for example. So they're specializing in certain things oftentimes. But one of the reasons why we like real estate in 2020 is just with the mounting geopolitical tension and the unresolved trade war. As I had mentioned, again, we're still with China, there's optimism, but we still don't have a fully settled trade agreement yet. So again, two of the relatively stable sectors for 2020 could potentially be utilities and real estate. Now, another thing to note with real estate too is that they continue to reward investors with a steady dividend yield while maintaining low volatility compared to the S&P 500 over the long term. And in addition to that, oftentimes we hear companies like Apple, for example, and Nike, a lot of companies that do business with China, lately they've been hurt going all the way back to 2018 because of the tariffs, and real estate isn't dependent on imports. So we don't have to worry about that if you hold a REIT or a real estate investment trust. You don't have to worry about any of the major issues with China if you're holding a REIT that contains different properties right here in the U.S. Now, when it comes to the type of REITs that we're looking at moving forward here in 2020, one of the REITs that's becoming, or one of the sectors that's becoming very popular is apartment REITs. And part of the reason why is housing prices, they're rising beyond the range of affordability in many markets with the best jobs. So we see this right now where the housing market is doing really well along with the stock market. But with that comes many people who are looking right now, especially younger people, where they graduate from college, they might have a little bit of college debt, college debt yet and they're looking to buy, well, oftentimes many people are bidding up the prices, and the prices for what they otherwise would be able to afford are now being pushed out of their price range. So what they have to do is they have to rent, and renting is really becoming the housing mode of choice for many younger individuals, many young professionals, and they'll move to different cities like New York City, Washington, D.C., Boston, San Francisco, Seattle, Denver, Houston, a lot of the big cities like that to try and get a job. And with housing prices rising so steadily in those markets, what they'll do is they'll instead go and rent an apartment. So many apartment REITs could be a really good sector to look at as we move forward here in 2020 with the housing market being where it's at.
Okay, before we continue, we're going to take a quick break.
You're listening to Dean and Tyler Listle, investment advisors with Secure Retirement Solutions located on Allied Street in Green Bay. For a complimentary review of your current investments, or if you have questions, please call them at 920-347-9888 or go to their website at srsplans.com.
Okay, the next one we're going to look at as far as, in investing or personal investments to make in 2020 is investing in yourself. And what we mean by that is the market out there for employment is very competitive. There are a lot of employers who cannot fill positions. So in order to fill positions, they are adding, additional incentives and bonuses and so on and so forth. However, we go to the employee side of it and we say, invest in yourself, acquire additional skills right now, because again, some of those better positions that they are looking to fill, they are available and they typically pay more. But in order to make yourself the person of choice, many times you have to acquire additional skills. Now's the time to do it. The market is hot. Go in there, spend extra time and money, if you're able to do it, to acquire additional skills to put you above the competition for some of those better paying jobs. Also, go for certifications, anything else to possibly launch a new career. So again, we hear from people, they say, I wish I would have changed careers. I wish I would have pursued this. Now's the time to really look at that, because again, the study material, the classes, the options out there are really good. And for you to launch a new career, now might be the time. You don't want to do it when the competition is so high for each and every job. Again, right now, employers are having a hard time filling jobs. So if you can acquire that skill needed for that job, now might be the time to look at it.
Yep, and Dean, as you mentioned, this one here it doesn't have to do with investing in stocks or real estate or anything like that. Investing in yourself, there's really two ways to make it work. It's acquire skills or certifications that will help you advance in your current career, or acquire skills or certifications that will help you launch a new career. And oftentimes I talk to a lot of people who are retired from their full-time career, but they want to work part-time and they want to do something that will bring in additional income to extend their retirement so they don't have to rely solely on their retirement funds, maybe if they didn't save enough. And one of the major reasons for that career stagnation and for them not finding a job could be lack of qualifications. And oftentimes I have many older or people who are retired and they might be in their early 70s and they still want to work, but they feel as if they can't get a job just because they're older than some of the other people that they're competing with, when in reality, they might lack qualifications. And we also have some clients that they retired from full-time work and they went to some local community colleges and universities, and they took some night classes to try and get certified in different things, and they're able to go and start and launch a new career and work part-time in a job that is more of a hobby to them. So that's something that we see oftentimes where, especially for people who are retired, they want to then go and work part-time and they often can't, but just because they're not qualified, they can't go into a new career field because they don't have a skill set, they don't have skills or certifications. So one thing that they can do in order to make it work is go and even after you retire full-time, take some courses, acquire skills and certifications that can help you in a new career that might be more of a hobby or passion for you, where you can do that, work part-time, and then also earn additional income to help you with your retirement too.
Okay. Many times we'll talk to those people looking to retire, and when we run a financial plan for them, What happens many times is we'll see an expense that really sticks out. And that is, for instance, if we could just get this mortgage paid off in the next couple of years before you retire, you're going to be substantially better off. Or we'll have a debt situation, might be a car or credit cards. You want to try to pay those off. But many times, based on the income that people are bringing in, they're not able to do it. And as we tell people, it really comes down to two basic things. You either need to make more money or you need to cut costs. And if people are in a situation where they don't think they can cut some of those costs because it might be student loan debt or credit cards, which are both very hard to get out from underneath, you're stuck paying those and many times delaying your retirement. So something you should look at possibly doing in 2020 is, invest in a side business. And when we say invest, that doesn't necessarily mean it's cash up front in order to get into that side business, okay? So many people have hobbies that they can turn to a business. If you can just start a side business and bring in $2,000 or $3,000 a year, that might be all it takes for the next 2 or 3 years of additional money that you can pool in order to use in retirement, especially with the way the market is going right now. Or you can use it to pay off debt when you're finding out that the gap is starting to get very, very small between the time you're working and the time you retire. Plus, if you look at ways of selling products and services right now, it has become so easy. Facebook Marketplace, eBay, Etsy, Craigslist, I mean, those things are all available for people. The only thing we recommend, though, is first of all, talk to a tax advisor, see what kind of tax relief you get or tax advantage. That's number one. Make sure you're doing it correctly and you report, your sales. The other thing, though, too, is make sure you try to cash flow this situation. And what I mean by that is start small. Start at your kitchen table, sell products or services from there. Don't invest a lot of expense to start a business that you haven't even gotten off the ground. Let it be a hobby, turn to a business, turn into a legitimate business if that's the case. So try to cash flow it. In other words, the first $200, $300, $400 that might come in from this, you can use $200, $300, $400, $500 to pay for some machinery you might need in order to grow it to the next level. Don't go out there and borrow $10,000 or $15,000 to try to start a business that you might go into for 2 or 3 months only to find out it doesn't work. So try to cash flow it, do it from the kitchen table, utilize the internet options that are out there. But again, this is a great way to bring in a couple $1,000 potentially each and every year prior to retirement to use to pay down debt before you hit retirement or to pool as income options once you do retire.
Yeah, and when it comes to investing in a side business, there was one number here that I was pretty surprised at. But according to a 2018 survey conducted by The Hartford, an insurance company, the survey said that 25% of Americans have a side business. So I was surprised that number was so high. I thought it'd be less than that, but 1 out of every 4 Americans have a side business. So numbers like that show that it's not only becoming a common practice, but the field is large enough for almost anyone to launch your own side venture and your own side business. And Dean, you mentioned many good reasons for doing so, but really it's going to take it. Oftentimes it's not going to be easy. It's going to take long hours added onto your existing job if you're already working, or if you're retired, it's almost going to seem like a full-time job going back to work to get this thing started up. But for many people, their side business, it eventually becomes their primary source of income and wealth over time. And that's rewarding for many people, especially clients that we see that invested in a side business and it became their main source of income too. So that's something, invest in a side business in 2020. That can be one of the best investments that you make.
Okay, and the last thing we're going to talk about is paying off debt. Use 2020 as a great example to take advantage of paying off debt, especially if you are an investor and you have investments outside of your 401k or 403b. You have seen significant gains in your portfolio. At least you should have. And if you didn't, come on in and talk to us. So, I mean, the market's been very good, but paying off debt, taking some of those gains off the table and paying off debt would be a wonderful thing to do in 2020. The other reason for paying off debt is many times we'll have prospects come into our office. They want to talk to us about potentially hiring us as their investment advisors. And we'll look at their statements and we'll start talking, gathering information. And the first thing that typically comes out of their mouth is, how much money do I need to retire? And first of all, that's, we don't want to answer that question until we know the full story. And we start out getting that full story by talking debt. And that is, if you get rid of a significant amount or all your debt before retirement, it's going to be so much easier to retire on less money than having significantly more money available but carrying a mortgage, credit card, and other debt. So we always ask people, let's focus on the next couple of years just prior to retirement to take care of our debt issues, get those in place. First of all, it's going to be a huge burden off of your shoulders when you do retire, knowing that you no longer have a mortgage, okay? So paying off debt is a thing you should really look at this year. You've had significant gains in your portfolio the last couple of years. If you're able to utilize some of that money to pay off debt, it might help you out here.
Yeah, Dean, so again, the last one for 2020, paying off debt. We're huge proponents of paying off debt. We really like to see people debt-free. And I'm going to come at it from kind of a different angle where we don't usually talk about this from it, or we don't usually talk about it from this angle. But paying off debt, it may not seem like an investment, but it actually provides returns that you can get oftentimes better than many type of asset classes and stocks, because most credit cards, for example, they'll charge interest somewhere between 15 to 25% per year. And paying off a card with that type of interest rate can get you a higher effective return than the 10% average annual rate of return per year provided by the S&P 500. So that's something where if you look at it that way, paying off debt really can be an investment in a way where that's money that you can then get freed up. And once you pay off that debt, you'll have that much more cash flow to put into some of the other investments that we mentioned on this list, such as investing in stocks, investing in your 401k, a Roth IRA, even just opening up a brokerage account if you want to do it not for retirement, or real estate. You could also invest in that as well. But really, by paying off debt, that will allow you to invest more money elsewhere, build up your retirement funds, save for other things, and just really it'll be a major weight lifted off many people's shoulders that we see, especially when they go through the process with us. And once they do pay off their debt, they can do so much more in terms of retirement savings or whatever they want to. They have the freedom to do what they want outside of that too.
Okay, that's all the time we have this week. See you later and hope you'll join us again next week.
We'll see you next week.
You've been listening to Secure Retirement Solutions with your hosts, Dean and Tyler Listle, fully licensed retirement specialists from Secure Retirement Solutions in Green Bay. To get more information from Dean and Tyler, contact them at Secure Retirement Solutions on Allied Street in Green Bay. Call 920-347-9888 or visit them at srsplans.com. Securities and investment advisory services offered through Brokers International Financial Services, LLC. Member SIPC. Brokers International Financial Services is not an affiliated company.